Today on the program, Nigeria marks 21 years of democracy as President Buhari says economic growth strategy on track despite COVID-19. The International Labour Organization and UNICEF say COVID-19 may push millions more children into child labour. And South Africa's business confidence hits record low as lockdown batters economy. Thank you for joining us. This is Business Incorporated. I'm Chimizi Obi Iwagu. We'll begin with Nigeria as the country marks its 21st year of democracy. President Muhammadu Buhari, in his nationwide address this morning, says his administration has recorded notable achievements in the course of implementing its 9 priority objectives and establishing a solid foundation for future success. Let's take a listen.
On the economic front, our objectives have remained to stabilize the macroeconomy, achieve agricultural and food security, ensure energy sufficiency in power and petroleum products, develop infrastructure, fight corruption, and improve governance. We have witnessed 11 quarters of consecutive GDP growth since exiting recession. The GDP grew from 1.91% in 2018 to 2.27% in 2019, but declined to 1.87% in the first quarter of 2020 as a result of the decline in global economic activities due to COVID-19 pandemic. Every single economy in the world has suffered a decline. Ours has been relatively moderate. In order to stabilize the economy, the Monetary Authority took steps to build the external reserves, which resulted in improved liquidity in the foreign exchange market. The external reserves grew from $33.42 billion United States dollars on April 29, 2020, to about $36 billion United States dollars in May 2020, which is enough to finance 7 months of import commitments. Agriculture remains the key to our economic diversification strategy. The Presidential Fertilizer Initiative Program continues to deliver significant quantities of affordable and high-quality fertilizers to our farmers. This initiative has also revived 31 blending plants and created a significant number of direct and indirect jobs across the value chain. Government is also revamping the cotton, textile, and garment sector via a CBN Textile Revival Intervention Fund that will considerably reduce foreign exchange spent on cotton and other textile imports. Through the Food Security Initiative, we are promoting grow what you eat and eat what you grow. I am also delighted that more and more Nigerians are taking advantage of the opportunities in the agriculture and agri-business sector. I assure you that government will continue to support agriculture through the CBN Anchor Borrowers Program and similar schemes.
President Muhammadu Buhari, Nigeria's president. And to intraday numbers, markets here in Nigeria is close to mark the Democracy Day celebration. However, the all-share index of the Nigerian Stock Exchange closed in the red on Thursday, down 0.13%. The JSE index in South Africa was up 0.52% at intraday. Markets in Egypt are closed also on Thursday, usually their last trading day for the week. The EGX 30 index was down 0.93% on Thursday. Kenya was up 1.23% on Thursday. And most Middle Eastern stock markets ended lower on Thursday amid falling oil prices, though the Qatari index bucked the trend on the back of its gains for its banking shares. Saudi Arabia's benchmark index slipped 0.25%, with National Commercial Bank losing 1.5% and Samba Financial Group shedding 2.2%. In Qatar, the index gained 0.5%, helped by a 3.5% rise in Qatar Islamic Bank and 0.6% increase in Qatar National Bank. In Dubai, the index dropped 1%, pressured by a 1.6% fall in Emirates MBD Bank and a 4.6% slide in Dubai Investments as the stock traded ex-dividend. The Abu Dhabi index eased 0.84%, with the United Arab Emirates' largest lender, First Abu Dhabi Bank, falling 2.4%. In Europe, markets made a choppy start to Friday's trade as they looked to rebound from the previous session's significant sell-off. Let's get Conrad to tell us more. Hello, Conrad. Good afternoon.
Good afternoon, Jimmy. Thank God it's Friday and happy Democracy Day.
Thank you very much. And well, yes, we can say thank God it's Friday. Anyway, the sell-off on the Western European stock markets has come to a halt, but the mood is very subdued on the trading floors. On a weekly scale, Conrad, how bad is it for the German share index DAX?
Well, the German index so far this week has lost around about 6.5%, a very strong statement by investors that this very strong gain of the German index from March to the beginning of this month, which was around about 50%, really was exaggerated. Jimmy, at the beginning of the corona lockdowns, many people on the markets had been hopeful that we would see a strong recovery. Turns out this is not the case. For example, if you take retailers here in Germany, they have been open for quite a while now, but business is very slow with those social distancing rules. People are very reluctant to go shopping. It's really not fun at the moment. And of course, also here in Germany, many people are not sure whether they will be able to keep their jobs in the coming months, so they keep their money together. And adding to all this, of course, are those concerns about a potential second wave of infections, which were fueled this week by a number of reports, among them the report that in the United States, the number of corona infections has risen above 2 million.
All right, now, what about the optimism in recent weeks that the economy might recover? Is this all gone? Those hopes for a V-shaped recovery, or at least something that looks like a U-shape?
Well, Jimmy, I have to introduce another letter, or let me say that investors are introducing another letter in the speculation. More and more people are talking about a W-shaped recovery. And what they mean by that is, of course, that we will have shaky times ahead. And if we look at the news flow, the corporate news flow this week, I think this underlines why. We've been getting a lot of negative pieces of news this week. For example, today, the United Kingdom reported that the economy there, gross domestic product, contracted in April by 20%. On the other hand, we also had positive news like this $7.3 billion takeover by Grubhub, the food delivery service in the United States, taken over by Just Eat Takeaway. We have reports, or at least rumors, about a couple of IPOs in the making, companies trying to come to the market and offer their shares. So, of course, in the coming weeks and months, investors will have will also have many reasons to be happy once in a while. But all this has to be seen in light of what's going on with corona, how countries are coping with new infections, how the health systems are doing. So a W-shape development of the recovery seems pretty probable.
Well, a quick one before I let you go, Conrad. Many shares of technology firms have managed to counter the negative trend this week. Today, Sony revealed the look of its new PlayStation 5 console. Something to inspire investors, right?
Yes, it has inspired investors. The share price of Sony here in European trading today is nicely higher. Of course, we still have no idea how much the thing will cost and when it will come out. But what we do know, if you check out the looks on the internet, you will see that the new PlayStation really looks very different compared to the previous models. No black or at least not overall black anymore. It's a very futuristic black and white design. So a very, futuristic statement to it. Looks like Sony wants to say hello, future, bye-bye to a bleak past. Also, for example, the 3D camera that comes along with the new PlayStation, very modern. Perfect thing, I would say, for people who want to escape those, mundane times we live in with so many corona-related news.
I can imagine. Anyway, Conrad, I guess it's time to say thank God it's Friday. Enjoy the rest of the weekend.
Thank you, Jimmy.
Yeah. And in the UK, the economy contracted by a whopping 20.4% in April from the month before as the full impact of the COVID-19 pandemic hit. Let's see how the markets in London have been digesting this unimpressive figure. Juliana joins us now. Hello, Juliana. Good afternoon. A whopping 20.4% contraction in April. How are the markets reading these numbers, or have investors already priced in the dismal projections?
Good afternoon, Chimi. Well, yes, investors had priced it in because nobody was expecting today to show any growth or, in fact, show that things had improved at all, even as some companies had opened quite early in the first stage of the ease of the lockdown. The FTSE did start in the red at early trading, but at intraday it has actually risen by quite a few points. But I suppose everybody understands that the FTSE All-Share in the UK is comprised of so many different international companies, so at times it doesn't really take into account the UK economy. That's really a point for sterling. At intraday, the all-share is up 0.95%, the FTSE 100 is up by 1.05%, and the FTSE 250 is up by 1.16%. In currencies, the pound is up on the US dollar by 0.05%, up on the euro by 0.01%, and up on the Japanese yen by 0.53%. It's worth mentioning that in the British media, this fall in GDP is really dominating discussions. Prime Minister Boris Johnson was just speaking live and is talking about the recovery because there are so many concerns about the recovery. At the moment, we know that unemployment is a huge topic amongst economists because right now a lot of these big firms are keeping people employed because the government are paying for their wages. That's beginning to taper off now. So it will go up until October, but by the end of August, companies will have to start putting their hand in their pocket to pay for some of these wages. And some are wondering whether or not people are going to do that or if they would go for redundancies as well. And of course, that OECD figure from earlier this week suggesting that 15.5% will be the biggest contraction out of all Western economies is of huge concern to the government. So there will be a lot of head scratching over the next couple of days in trying to figure out how exactly Britain is going to get itself out of this COVID-19 pandemic slump.
And of course, the UK's trade with other countries also collapsed in April. Not surprising, was it?
It wasn't surprising, and I believe that's the only kind of data that is reflective across the world. Borders have been closed, manufacturing was really shut down, and construction was put to a halt. Of course, this has been a gradual ease because a lot of people look to China when it comes for exports and imports, and they shut down pretty early. So there are no surprises there. But we do have something else coming up, which is Brexit. At the moment, we all know that the negotiations between Michel Barnier and David Frost, both chief negotiators on each side, hasn't gone well. Michel Barnier has been very vocal in saying that he thinks the negotiations haven't been helpful. Britain haven't been very rigid. Well, Britain have been very rigid. They haven't been willing to compromise on certain issues. So there are fears that we could be heading for a no-deal Brexit. And Caroline Fairbairn, she is the Chief Executive Officer of the Confederation of British Industry. She says it would be completely crippling for businesses if we are to crash out and go into World Trade Organization standards. So we are hoping over the next couple of months that perhaps a trade deal with Brussels can be etched out. I believe Boris Johnson will be speaking with the new EU Commission chief sometime soon, and perhaps that can be the saving grace. But yes, trade with international companies and organisations are not going well with Britain at the moment.
Sure that Brexit talk will dominate the headlines next week. Let's keep tracking them. Thank you, Juliana. Enjoy the rest of the weekend. After the break, millions more children risk being pushed into child labor as a result of the COVID-19. Details in a moment. Just stay with us. The International Labour Organization and the UNICEF say millions more children risk being pushed into child labour as a result of the COVID-19 crisis, which could lead to the first rise in child labour after 20 years of progress. According to COVID-19 and Child Labour Report, a time of crisis, a time to act. Child labour decreased by 94 million since 2000, but that gain is now at risk. The report says children already in child labour may be working longer hours or under worsening conditions. More of them may be forced into the worst forms of labour, which causes significant harm to their health and safety. ILO Director General Guy Ryder says social protection is vital in times of crisis as it provides assistance to those who are most vulnerable. According to him, integrating child labour concerns across broader policies for education, social protection, justice, labour markets and international human and labour rights makes a critical difference. And Ghana is reeling under the deadly coronavirus, which is impacting the economy and the health system. To cushion the effect, Ghana has lifted its lockdown restrictions, but analysts say enormous resources will be needed to recover. Joining me now to talk more about this is the managing partner at Bespoke Business Consulting in Accra, Ghana, Mr. Alabi John Kennedy. Good afternoon, Mr. John Kennedy. Thank you for joining us.
Good afternoon, and good afternoon to your viewers.
So what's your assessment of the government's efforts to bring about normal life and flow of economic activities to the country?
Well, generally, the government of Ghana has been sympathetic of the plight of Ghanaians, whichever party which is in power. But in this case, it's been a bit difficult for the Ghanaian populace to understand how they can sail through in this pandemic. However, the government are putting some strategies in place to help the Ghanaian citizens to be able to sail through the pandemic. Notable among them is the loan set aside, about a 1 billion Ghana cedis loan, which translates into about $170 million. A partnership between the government and the banking system in Ghana. This is to help small businesses to stay afloat and survive in this economic challenging times. Then there's a tax relief that was given to those who came to the aid of the government during the major impact of the pandemic. Then the citizenry itself are able to access their Tier 3 pension scheme fund contribution tax-free, so that they can use that to also support their individual selves. The opening of religious gatherings also helped, and as well as the mandatory use of masks and social distancing. So all in all, the government is actually trying to make sure that the citizens sail through in these challenging times.
Now, Ghana is an import-driven economy. With the borders still closed to imports, what would be the impact on the country's international trade and reserves?
Okay. Yes, Ghana is an import-driven economy. However, the pandemic has changed things a little bit. So the Ghanaian government did not put restriction on the importation of goods and services. They only put the restriction on the movement of people. Because of this, there's been a flow of goods and services into the country. However, the quantum at which the inflow has dropped drastically because of the pandemic in other jurisdictions. Now, this has also impacted the taste of Ghanaians in a positive way, because normally they don't really want to buy their own homemade goods. But now, since there's no more huge inflow of the imported goods, they are now forced to provide or like the locally made products and services. And this has also really helped to move businesses forward here in Ghana. The new era has actually gradually changed the tastes of Ghanaians. So right now, we can say this has actually contributed positively to a little bit of economic change for the Ghanaians.
So what sort of fiscal and monetary response should be expected to mitigate some of these impacts of COVID-19 on the economy?
Well, I think one of the most important things fiscally is to put a strategic structure in place to enhance more revenue blockage. I mean, when I say revenue blockage, tax blockage, because here we know that there are leakages in the system, and because of this, they are not able to amass enough revenue. When strategies are put in place to block these leakages, it helps to actually increase the funds which needed to be spent. Now, when these funds are got in, the spending attitude of the government should also change, because you have to now focus on the critical areas of the sectors, such as the health care area, education, and providing of the stimulus package to the masses. So the two things I need to get clear to the government is to make sure that they're able to block all the leakages, one. Secondly, make sure they have a prudent spending attitude, so that at the end of the day, they can be able to balance both the inflows and outflows of funds and fiscal policy spending.
All right, thank you very much for your time, John Kennedy. Alabi John Kennedy is the managing partner at Bespoke Business Consulting in Accra, Ghana. Thank you for your time. And South Africa's business confidence has hit a record low in the second quarter as the coronavirus-led lockdowns told an economy that was reeling from a recession even before the COVID-19 pandemic. The Rand Merchant Bank Business Confidence Index compiled by the Bureau for Economic Research was at 5 points for the second quarter, the lowest level since the first survey in 1975, and down from 18 points for the first quarter. Speaking to Channels Television in Johannesburg, Dr. Azaj Amin says conflict between political and governance considerations is partly to blame.
There's no question that the South African economy has been weakening for the past decade. Today, a year ago, the country was very exhilarated and in high spirits. It opened the FIFA World Cup, which was a great success. Business and investment was pouring into the country, and people were encouraged to travel to the country as tourists. Since then, however, there has been a gradual decline in the country's economic growth performance, and over the past 5 years, adjusted for the growth in population, living standards have actually been declining every year. So the economy was already in recession prior to the onset of the COVID-19 crisis. What the virus has done is to encourage the South African government to enforce lockdowns and social distancing that, like in many other countries of the world, have had devastating consequences for many people in the economy and exacerbated dramatically the hardship that people were already feeling prior to the crisis.
And with that, we draw the curtain on today's edition of the program and, of course, for the week. Thank you for watching. I'm Chimezie Obi Iwawu.